Alright guys, so welcome to the first session of our complete trading course. So in this session we are going to understand what is actually trading, what is technical analysis, and what are the topics that are going to be covered in this course in order for you to be an independent trader. So I am assuming the fact that you have a basic understanding of the stock market, how it works, what is an exchange, what is an index, everything, right? So if even if you don't have an idea, just follow it along. Things will be clear by the end of the first few videos, right? So all right, so first things first, what is trading and how it is different from investing, right? So obviously, for a retailer, for a person like you and me, right? How can we, benefit from the stock market, right? As we know that stock market is a place where we put in our money, whether it is for a short term or whether it is for a long term, and eventually our motive is to make money from it, right? So how it works? So either you can be an investor or you can be a trader. So yes, there are two perspectives of people when it comes to the stock market, right? So that is broadly classified into trading and investing, right? So what is investing? It is very simple. Say for example, you find a business that is listed in a stock market, right? Say for example, let's take the example of maybe Bharati Airtel or maybe Reliance, right? So you find that a company that is listed in the stock market is going to perform well in the long term, right? It has got a good business profile, it has got good financials, right? The fundamentals of it are looking great. So how you take help from it? You have the vision that, yeah, if I put in my money in this company, if I buy its shares, then eventually um, my my money is going to grow along with the company in future, right? So yes, what is the perspective of an investor? So that an investor likes to participate in the growth process of a company, and over time he or she compounds his money by just being invested in the stock market, right? So he picks a set of good stocks, right? He invests in that and he holds it for the long term. So yes, by this time I'm sure you will be able to understand the fact that investing can't generate a steady source of income for you, right? I'm not talking about dividends, right? If you don't know about it, just keep it aside. This is not a concept that that is going to either help you out in this scenario in our course, right? So what I mean to say is that by being invested in a company, right, so you just put in your money and you just forget it for the long term, right? So yes, so today if you have purchased 50 shares of Reliance, then you have the perspective, if you are an investor, you have the perspective that yes, I'm going to hold these shares for at least 20 to 30 years, and after that I may sell them, to book the profits, or I may hand it over to my next generation, right? It works either ways. So that is the thing, right? So investing is basically, buying and holding the stocks, right? You put in your money and you forget it. But when it comes to trading, right, so trading is a completely different way of looking into the markets, right? So trading is something that if done properly can generate you a steady source of income, that can generate you a decent income on a monthly or a yearly basis, that you can utilize it for your own goods, right? So obviously, what is trading? So trading is basically a process, right? It is a system. It is a process of speculating the markets. So what do I mean by speculation? So yes, say for example, you develop a skill, right? You have a skill, right? You are able to predict the price movements in the market, right? So say for example, you can predict that the market is going up or going down, right? So you are good in it. So why not benefit from this, right? So whenever you feel that the market is going up, you put in your money and you capture the movement. If it is going down, you sell your shares, or maybe you short sell. Yeah, I'm going to come into this later, right? Don't worry about it. What is short selling, what is buying selling, right? Everything will be covered. So just by predicting the short term price movements, right, in the market, obviously how the prices move in the market, it is because of two things: supply and demand. So yes, I'll just give a brief introduction to that as well. So let's take the example of a real market, right? So take the example of fruits, right? So let's take the example of mango. Let's see, right? So how it works. So mango is a seasonal fruit. It comes in July, right? Right around the summer season. So what is the pricing of it during that time? So initially, when the first few shopkeepers, the first few fruit sellers, start selling mangoes, so the prices are really high, right? Why is it so? Because obviously there is a very high demand of it, right? Initially in the the first few days of its selling, right? So initially the prices are really high. The shopkeepers, the sellers charge a lot of money for even for a 1 kg of mango, right? So but with time, when the supply increases, right, when more and more fruit sellers start selling mangoes, then the prices start increasing, sorry, decreasing, right? Why is it so? Because yeah, say for example, initially 1 kg of mango was being sold at 180 rupees, right? And with time, when a lot of shopkeepers start selling mangoes, there is a lot of supply in the market, right? Lots of people are bringing mangoes from different places, different sources, and they are selling it. So eventually the prices decrease, right? So 180 goes down to 80 rupees or 100 rupees or even lesser, right? And if I have to talk about the demand, so initially, obviously, right, when the first few shopkeepers or sellers come in the market, right, to sell the mangoes, that there are a lot of people who are interested to buy, right, who think of buying, they are willing to pay a lot of money to purchase mangoes initially, right? So everyone is excited about it. So what we can understand from here is the demand is very high initially and the supply is very low, right? There is a lesser supply of mangoes, as well as the demand in the market is really high. So yes, that is the reason why mangoes are sold at a very high price initially. But with time, right, as the supply increases, the prices decline, right? So this is very evident in the initial season. The prices are high, and as the time goes on, the prices decline. And by the end of the season, right, when the supply again starts going down, the prices are again higher, right? So the prices start increasing again. So yes, this is a curve. So initially the prices are higher, right? It goes down with time, and again the prices increase as the supply decreases, right? So I hope this makes sense. This is the example of a real market, right? So the same way, the prices of the stocks go up or go down in our stock market, right? So it is all about supply and demand. So obviously there is a limited number of share for any company in the stock market, right? It is a fixed amount of stake that a company has placed in the stock market, and obviously there is a limited number of its shares, right? So what happens is, when there is a higher demand of its shares, then the prices start increasing, right? But as the time goes on, if the demand goes down, right, if lesser people, if the buying pressure, if lower and lower people are interested in purchasing this stock, right? So at that period, what happens is the prices start declining, right? So I hope this makes some sense here, right? So how the stock market works? It works by the principles of supply and demand, right? So again, we are actually going to understand the supply and demand in a very different way, using the help of technical analysis, in order to predict the price movements in the market. So again, let's come back to what is trading. It is just a system by which you can benefit from your predictions of the market pricing direction, right? So if the price starts going up, then you take you benefit from it. You buy the stocks, right, and you capture the upside movement, right? You make some money. So you buy a share at 2000 rupees and you sell it back at 2500 rupees. You make 500 rupees per share, right? So how you benefited from it? You felt that, yeah, you predicted the movement of the price beforehand, right? So when it was priced at 2000 rupees, you predicted that it would go up, right, towards 2500 to 3000. And what you do is you buy the shares and you make some money, right? So what is it? It is just a prediction, it is a system, it is speculation, right? So when you speculate the price movements in the market, that is, you predict the price movements and you benefit from it, so that is basically being a trader, right? So obviously, first things first, let me make this clear. You cannot be 100% accurate in your predictions, right? Prices are very much random, right? There are a lot of factors influencing it, right? So stock market is a big deal, right? There's a lot of money invested here, right? It works closely with our economy, it works very closely with the geopolitics, right? So what is the overall, scenario in the world's economy, right? Or it is politics or any everything else, right? There are a lot of factors influencing the stock market, right? So that is the reason why you can't be 100% accurate in this, because it is just impossible to factor in all the important factors that influence the market. And keeping all those in mind, you will be able to predict the short term price movements of the markets, right? That is purely impossible, right? So obviously, we are going to take help from technical analysis in order to predict the price movements in the stock market, right? So whether it is going up, from what region it is going up, from where it is coming down, so everything we are going to understand, right? The technical analysis, right? What is it again? So this is a, you know understanding, this is a theory, right? So it assumes that, technical analysis assumes that, the future price movements of any asset, whether it is gold, whether it is a stock, whether it is crypto, right? The future price of any asset can be predicted by the past pricing of it, right? The existing price action of it. So using the existing price movements, you will be able to predict the future prices of the asset, right? So that is what is called as technical analysis. This is the basic assumption of technical analysis, that by looking at the previous prices of any asset, you will be able to predict the future pricing of it, right? So many people believe it, many people don't believe it. They claim that technical analysis is bullshit. So yes, prices are random, right? And it can be at any value at any point of time. But since technical analysis is a widely accepted way of speculation, right? So that is why the prices seem to respect the rules of technical analysis, as we are going to learn in future, right? So obviously, let's not get into that. We will be understanding this technical analysis on a deeper level, right? And taking its help, we will be able to predict more or less accurately, right, the price movements in the market, and we are going to take help from it. So I hope this is clear, right? I hope I was able to make you understand what is technical analysis with the help of some examples, right? And how trading and investing are different, what is the psychology associated with trading, right? We'll come to this later, right? So this was a very introductory video, a session, right? That is definitely going to help you out to cover the upcoming videos in the later section of the course, right? So again, coming to technical analysis, let me just remove this, right? So you can see here that I have this charts, right? I have this charts. So obviously I like to introduce you to this website. So this is called as Trading View. So again, how to open this? Just open a new tab, just search tradingview.com or .in, anything, right? So once you search that, you will be introduced to this kind of a UI, right, interface. So here you can see the market summary. You have Nifty, you have Sensex, you have S&P 500. This is the index of the US market, right? This is Nasdaq, right? There are a few sections in the website. There is news, there is some stories, everything, right? It covers a lot of factors, right? Now again you have to log into this, right? Here, this is my account, right? Make sure to log in into this. There are paid plans of it, but as of now you don't really need. Even I don't use a paid plan, right? It gets the job done, right? So trading view, now this is where is the search bar, right? So here, let say for example you want to see the chart of Nifty, right? Nifty's price action, Nifty's price movements in the last in over time, right? So let's just search Nifty here. So if you see Nifty, just open it, launch chart, right? This is where you have to click on. Now I am introduced to the chart of Nifty, isn't it? So obviously I will go into the details of this website, right? How these things work, what is time frames, everything will be explained in detail. So I just want you to get introduced to this website. Just try to mess around with this, right? You don't have to worry. This is the most important website that we are going to use from now on for till the end of the course, right? So yes, that is the reason I have not created any separate PPT for this course. Why? Because I want you to be introduced to this website from the initial phases of your learning journey, right? So all right, so this was this is the chart of Nifty. So again you can see how the prices have fluctuated over time. So you can see that I can move the cursor here. There is a scale here, there is a scale here as well. So 2022, 2021. So from 2021 to 2022, what has been the price movements? And again from 2022 till November 2022, that is the current time, right? What has been the price movement? So here you can see that the price was more or less in one direction. But if I talk about this region, you can see there is a lot of fluctuation, right? Volatility, this is what we term as volatility in the market, right? So again, just a brief introduction how the things work, right? Obviously we are going to look into this in a much better fashion, in much more detail in the upcoming videos. So yeah, the next session again, that will cover all the basics of technical trading view, right? So how you have to work on it, and what are these tools, how you can use them, right? What are they? So everything will be covered, right? So again, bear with it. Initially you might have some problems to understand, but I am pretty sure that by the end of the course you will be a master of technical analysis. You will be able to frame out your own strategies to work in the market, right? So see you guys in the next one. Thank you.